Good morning. Today is Sunday, March 2nd, 2025, and this is the weekly Bitcoin price forecast. So, looking at where Bitcoin went in the last week and where Bitcoin could potentially go in. All right, so this is week 98 at this point. So, we're approaching week 100. Um, this last week was interesting for sure. We'll take a look at a lower time frame, but February ended up being one of the not so great months in the last several year or two. Honestly, I mean, I'm even looking at some of the months here. So this is 14% drop. This was 8%. February was a 17.69% drop. So even here, how much was this big one? That was 11%. 6.92, 16%. Yeah, no, February was a huge drop. Like even this big drop at the end of the last bear market was 13%. But I'll show you why that's not as concerning as it looks. I mean, because I'm not gonna lie to you, that's a big drop. That is a really big drop, and the market is understandably spooked. But I'm gonna, kind of chart this out and show that there are different routes. That the reason you have this big wick here is because there's a very strong area around here that has proved itself time and time again. So we're gonna walk through all that. So I don't know how long this one will last. I'm gonna try to keep it under 15 minutes, but I think we can do that. So okay, again, this is the monthly chart. Seeing that you had this run up from November, December, January, and then we're in February, and well, actually we're in March, but we had this February drop. It was possible. So the thing is, you had this major move in November, and I have an indicator that kind of shows the imbalance, the area where price kind of closed, and like the gap between this pretty much. So you see, you have this big green area right here. That means price shot up very quickly and didn't have time to come back down. Usually, what ends up happening is when you have something like this, these big gaps, price will come back down, go up, and come back down and kind of fill some of it. And then, like here too, you had a big gap up, and then it came back down to here, and then filled that up, and then it moved. So on and so forth. So even here, it came back down, filled it over the course of a while, and then like this area, it never got filled, but it may never get filled at this point. So yeah, so we're on the monthly chart pretty much. I think that's all we need for this one, and then we'll go to weekly. So you see, this is a very boring year, honestly. Since this was super boring, it was just in this range for all this time. But I'm actually excited now because it's finally got some motion. There's a direction that's been used up pretty much, and we see here on the weekly chart the imbalance is right here. It's gotten cleaned up. Even if it goes down to here, it's going to start touching the moving average, the 50-week moving average, and then it's going to go back up to the upside. So this is cool. I'd rather it be over a week period and then we recover. So I think what's going to end up happening is we'll probably have like a little ranging for 1, 2, maybe 3 weeks, and then we'll start moving up to the upside very quickly going into April. Or it could be in March too. I just don't know what's going to be released, but it's exciting. I am excited that we actually got some motion at this point. So let's turn on the charts. We see at this point, like I try to draw channels pretty much just to see kind of where price is staying in. So you had this big bull flag, and then you had this continuation up to the upside, and then eventually it came down to here. But what you could also do is expand this out a little bit. So like it's still the same channel. Like there's a channel here, and let's move that here. Connect the tops of that, pull this down, and then I kind of want to move this a little bit. See if we can do this. Kind of connect these tops. Yeah, and then you have like kind of this channel, right? So it comes out of here, and then it bounces around here. And you can kind of like manipulate it in a sense to where this is still, you can make an argument that this is the area that it could bounce off of. So you have the bottom of this like channel to where it's going up and down, shot up to the top of here, and then came down. And actually, we could probably do that a little bit more too. Something like that. Anyway, somewhere in that range to where it kind of bounced off. Now that you have more data and you can kind of make a better model, you can see that this area around 75 is an area that it could bounce off of. Again, I think this is a fantastic buying area if you haven't been in. Like, it had a couple options, right? It could have blown past up here and then just kept going, or it drops down and kind of does this motion. So you see that, and then what ends up happening next is in a very short-term fashion, you probably end up running up to 120 real quick. You might pause, and then 150, 160 comes in very short order. Because this is going to be, in my opinion, the time where we break this long-term channel that's been going since late 2023, pretty much. And now we're in 2025. So I got a couple things marked off here. So you have your short-term holder realized price. This is a line that tends to hold pretty strong during the bull market, but it does occasionally go below that. So like even here, the short-term holder realized price was somewhere around 60,000, and it just like for a while it ranged below it and then it shot off. So the actual realized price is somewhere around here. I haven't updated this from last week. These are not the updated numbers, but it doesn't change too much from week to week. And then long-term holder realized price is somewhere down here around 25,000. So it's interesting. Yeah, like I think we're in a bounce area pretty much. If corporations or governments or anybody is going to buy at this point, hey, this is probably going to be the time they're going to do it. So I don't see these prices sustaining for long. And again, we went through months and months and months of range. So to see some type of movement here for me is exciting because now it's almost a reset. Like people, money starts to flow again now that there are better discounts, that there are better, there was a lot of liquidations this week too. A lot of people got liquidated and whatnot. So that does take some time to get recovered, especially if you were on the long side at this point. I personally stayed out of the markets for a while here just because at this point it was just too rangy and it didn't make a whole bunch of sense to trade. But still long term holding, and I guess I'm talking about day trading here, but like long term holding, it's definitely still up. My target is still 450,000 before the end of the year. All right, I'm 6 minutes in. I said I want to keep it at 15. So like let's I see if I'll speed this up here. So again, it just kind of broke down. It's kind of rested on the 200-day moving average right here, and then I think it could continue to go up. Again, this is a pretty strong bounce area. So you have the 200-day moving average. You have the 50-week moving average, which is pretty strong. The 4-hour moving average is above it, but once you start having these daily and weekly moving averages, then it gets to be a little bit stronger. So I'm going to go to one more chart. This is one that I kind of drew up the other day. So, well, actually, I've had it for a while, but I just marked it up a little bit differently. So, Bitcoin moves in parabolas, like these big, almost Nike check mark, like looks type movements. So it bounces around along this kind of curve that it forms, and then it starts getting exponential and parabolic. And then it just starts moving very quickly up this curve. And I think the curve is actually a little bit steeper than this, but this is a good approximation, right? So you see, like in 2022, it bounced off the curve, bounced, it did another bounce, it went up, it bounced right here one more time back in September, and now we finally touched that line again in March of this year. So I think what we're going to end up seeing is, again, we talked about the 50-week moving average. We talked about this, I guess, long-term support and resistance. It's more like the previous all-time high, which serves as support and resistance, but that's a more accurate description, right? So you saw it resisted a lot here at this all-time high, but then it kind of broke off. But, so it comes back down eventually, only to end up going back up. So you hit actually, and I talked about this line, right? This historically is a line where price comes up to here, boom, touches it, this white line. And then touches again, boom, boom. And then it does one more, boom. I'm telling you, I think that price is going to get on the other side of this line finally. And when it does, it's going to be a very violent move to the upside. So right now it's projecting out like, if it follows this line, then Bitcoin won't get above 130 for several years, which is just not true. It's not going to happen. It's going to break this line in short term, like within the next couple of months, I would think. This line is powerful. This line is powerful, but this one's going to get broken. So definitely a bounce area here for sure. So one more thing, we'll go through kind of previous cycles, right? So this is the Bitcoin short-term holder realized price, and it's something that I talked about on the other chart, but this is the real-time kind of data, right? The historical data, I should say. So what ends up happening is you have a peak, and then it kind of forms a bowl, a swoop, and then it goes up and continues to go up. But what you follow here is this orange line. And then you see like it does a tap here, it goes up, tap here, it goes up, tap, support. And then once it gets on the other side of it and it's consistently going below it and tapping it from the bottom side, then at that point you're in a bear market. But we're not there yet. So that was 2011 to 2015. All right, now let's go 2015 to 2018. Same thing. You have a peak, you go over, you form a bowl, and then you have your short-term holder price. So it's going down, and then finally it gets on the upside. So support, bounce off, and then it finally goes down. Okay, we're in the bear market, 2018. Boom. This is the mania peak, right? And then it fell off. So that was 2014 to 2018. 2023. So you have 2018 to 2022. Again, you form a peak and then you form this bowl. Short-term holder realized price, it bounces off here and finally gets above the top of it. This one's a little bit different. You had COVID, and also you had a lot of money that was printed overnight. That was like $3 to $7 trillion. I can't remember what the figure was. But you have this bounce off of the support here, and then it ends up going up. It goes up, and it makes this mania peak. It comes below it. Again, this is a huge move, so it makes sense that it would go below it. And then it supports it one last time, you make an all-time high, and then it comes down. You're in the bear market. All the way to 2022. The last one is current day. So again, you had this 2021 peak, you form a bowl, you see we've already crossed it. You came in the bear market, short-term holder realized price, it goes up, it bounces off. And then it finally ends, right? So you get into 2023, and this is around the time I started Chris Talks Crypto, somewhere in here. It was around 30,000. And again, short-term holder realized price, bounce off. It bounced here. It came under here for a little while. That's fine. As I said, it might right now. Bounced off here and then came up in the span of a couple weeks, and then it bounced off here at what is this? This is around the ETF time, and then like it stayed here for months, and then it finally kind of bounced off from this area and came up to where we are now, and we're finally touching the line again, which means that we're pretty close to going again to the upside if history repeats itself. I think it doesn't. It doesn't repeat, but it does rhyme. So we'll end up seeing how that goes. I am optimistic here, and we'll just kind of see. That's all we can say, right? The only other thing that I'll look at, two more things. So I guess global liquidity index, right? So this is the amount of money that is flowing in the global system at any given time, and as that increases, realistically, the prices of assets around the world increases along with it. So what you end up having is this is like a moving average maybe of the global liquidity index, and just like the price, once the liquidity index crosses above this moving average, then suddenly you have a bull run and things start to take off. Just like as you did here, there was a cross, and there was a bull run, little mini bull run, and I expect that trend to continue because liquidity really does move the market, especially as we talked about. Take the drawings off. Especially as we talked about here, like this is all a liquidity play. It was a liquidity play. Like there was some imbalance to be cleaned up there, and it's something that you can look at. So again, liquidity. Not too much else to touch on there. It just shows that we have an imminent cross, and that of this moving average, you could have some type of bull run in the short term. So rapidly increasing prices. The last thing is they are having the White House to host the first ever crypto summit on March the 7th. So this Friday. That's huge. Like again, this administration has with open arms embraced crypto. So I mean, as always, not a political endorsement of any kind, but it is, if you're in crypto, it's great to see that you finally have, for the last 15 years, this has not been the case. And all the administrations have been in one way or another pretty anti-crypto, and I understand in the past, like it was much more risky for them to be anti-crypto, but Bitcoin especially has been it's been elevated at this point. I mean, the world sees it as pristine collateral. The largest institutions and governments in the world are actively planning to get their hands in. So the market is no longer really in the hands of retail as it was in the past. It's like now the major driver is this institutional capital and this governmental capital around the world. Because again, they have the deepest pockets. Like their pockets are just much deeper than retail. And the other thing is they can literally just print this money out of thin air, essentially, and print fiat to buy Bitcoin. And that's what's happening. We're using the debt system to transfer into Bitcoin. I think there is this shift, and it's happening every day. We're in the middle of an arms race. So again, I say all that to say this will be happening. There's more and more momentum as time goes by, and we'll see how it goes. So I'm at 14 minutes and 45 seconds, and we're gonna end it here. I said 15 minutes. So again, this has been Chris Talks Crypto. Check out any crypto-based resources on christalkscrypto.com. Get the Escape Velocity Boot Camp. And other than that, y'all, I will see you on the moon. Take care. Bye-bye.